Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is March 2nd, 2023, and I'm not joking you. This is your lucky day. There are two videos on the precious metals coming to you right now. Two separate videos. In the first video, it is going to be silver coin investing. This is the one that you're watching right now. Yes, we're going to do something very different this week from what we usually do, which is to actually talk about the individual coins and some of the values that exist right now in the silver market. We're going to talk about these. These are the American Silver Eagles. Then we're also going to talk about some of the other options, the silver maple leafs, the silver philharmonics, a lot of the beautiful government-issued silver coins. Because I had a question submitted by a listener and they asked, is this a good time to sell your silver coins to buy either gold coins or other types of silver investments such as silver bars? And so we're going to look at an in-depth answer to that question right now based on the available evidence to us across the market. That is this video right now. And the second video that will follow this immediately is for those investors who are ready to think about silver private placements. And private placements are a form of investing where you are buying shares in a silver mining company at very favorable terms. And so if you have a certain amount of disposable income, a certain level of net worth, you would want to consider not only the silver coins, but you want to consider the private placements. Without further ado, let's get into the silver coin investing video. Make sure to stay tuned for the next video as well. Before you go anywhere else, make sure to hit the red subscribe button and the bell icon so that you'll be notified when these videos come out. And make sure to subscribe to our feed on Twitter because, guys, I don't always post videos every single week. But sometimes in the middle of a week or sometimes when I take weeks off from posting videos, I do quicker posts on Twitter for free. So make sure to subscribe to the iGlobal Gold Twitter feed. Let's get into the silver coin investing. Very briefly, our legal disclaimer. And let's look at the question. Hi, Christopher. I have a question about silver premiums. Currently, silver premiums in the States are extremely high. Hard to find silver eagles under $40. Doesn't make sense to flip silver coins for gold right now with the premiums so high. This is from Andrew V. in the United States. Okay, so thank you for the question, Andrew. And what I want to do first is to bring up, this is just a sample from one of the online dealerships here in the United States. I have no affiliation with this company, so I don't care if you buy or sell from this company or any other company. But I did do a search of about 4 or 5 different dealerships, online dealerships here, just before preparing this update to go out to you. And I did find some of the better deals as far as silver eagles go on Bullion exchanges. I believe they're based in New York City. So, you had mentioned the $40 level, and I think back when you wrote this question in, it was in December, and the price was pushing up against that level. We've obviously had silver come down by a few dollars itself, and then I'm not sure which dealership specifically you were looking at, but perhaps if you compare your typical dealer with Bullion exchanges, maybe they give you some better prices here. But the best price right here that I was able to find was right in this $30 range. Okay, so obviously the higher you buy, slightly less price, but let's talk about right in the range of $30. So this is just for reference where we are right now. And so you think about spot silver trading under $22 right now. These premiums are absurd. They're absolutely absurd. I covered this a number of months ago. And Andrew, you may have not been a member at that time, or maybe you didn't see that update. I did not specifically address the question that you're asking here, but I did talk extensively about the silver premiums and what that means from a big picture standpoint, and especially getting into that question of, is there a shortage in silver because we see these high premiums. And the takeaway of that is no, there's no shortage in silver. Just as there's no shortage in refined T-shirts that are stamped by a rock band, that might sell for $75 for one T-shirt when you could buy a plain white cotton T-shirt for $3 or $4, right, at a discount retailer. It's all about the refining and the manufacturing and the limitations in the stamping of the official seals that go beyond the bulk commodity. Anyway, back to your question, which was more having to do with swapping of potentially silver for gold, and then talking about that with respect to the premiums. So, okay, here we are, reference, we're talking $30 range for one of the best, most liquid silver investment grade coins in the world. The first thing that we should do is update the gold to silver ratio. I'd been meaning to do this for the last number of weeks, hadn't had the opportunity, so this provides us a very good opportunity. So in order to address that question, we first need to look at the relationship here between the metals as far as spot prices, and then we can talk about some considerations with the premiums themselves. So for spot prices, gold to silver ratio, on the negative, first of all, in other words, telling me that silver is not yet ready to outperform gold. What I am noticing here is this recovery of the black line that we have at roughly the 81.4 level. And you can notice here that level acted as support back in 2019. Notice once it broke through, resistance, all this resistance here at that 81.4 level. Notice breaking out, support in here, support right there. So for some reason, the market is keying on this 81.4 level. I don't have to know why in order to know that it's important. We did have a small head and shoulders top formation here, which would have been good for the metals because a topping formation in the ratio tends to mean that both metals are going to rise in price. So this was good to see this top formation. However, the recovery of the 81.4 level here argues that pattern is no longer valid. So we no longer have this short-term topping pattern. It looks like the ratio wants to now meander slightly higher still in favor of gold. The key is that meandering should be happening on what is an even more important breakdown than the head and shoulders top pattern, which is this 2-year rising channel. So the 2-year rising channel in favor of gold following the compression after the coronavirus panic, that rising channel was broken lower fairly decisively here in favor of silver just at the end of 2022. And so the recovery that we've seen here, although not ideal from the standpoint of that head and shoulders top, still fits within the more intermediate term model of this being a situation where all silver needs to do is start to kind of bump its way here, perhaps slightly higher over the next several months, but within the larger model of a new significant downward trend still having been established. And so all that's happening right here as the ratio, let's say, bumps into the 85 to 87 range over the next several months, is that this represents a counter trend retest of the broken blue channel with the red call out serving as the breakdown. So markets often like to retest broken trends, sometimes even at a slightly higher point than the original breakdown. We now have the even stronger downward trend. This will be the third data point that is getting ready by April or May of this year to come in for this stronger downtrend. So when you juxtapose a broken rising trend with a valid, stronger downtrend, the bias is strongly that this ratio, even though, as I said, may have a couple more months to bump and grind here slightly higher, should be rounding over in the vicinity of that data point around 87, the confluence and convergence of blue and magenta lines here, should be rounding over and moving lower, basically starting mid-2023, through most of 2024. Okay, and so this is why I still think that there is some nominal price weakness to come in both metals. There is room for this ratio to move a few points higher. Following that, though, we should be looking for the move lower. Now, I'll get back to your question in just 1 second. Let me just finalize the analysis here on the ratio. Big picture, gold to silver ratio. We were just looking at this right there. Drawing in the future targets for both metals. Remember, these targets are dependent on gold actually breaking out to a new all-time high. So I'm putting it as a future target. It's not a target yet. It's a target when that level is triggered. But I have told you that when that level is triggered, we will be looking for a measured target of 25.35 gold. And when silver breaks its bull flag formation, that should give us a range of 44 as the measured target up to the psychological $50 level. And so if we just do the math, 25.35 divided by either 44 or 50, it implies a gold to silver ratio target of a range between 50 to 58, depending on which one of the final figures is in fact achieved for silver expectantly. So future target for the gold to silver ratio is going to be down here in the 50 to 58 level. Notice that doesn't even get us anywhere near the 2011 peak or even some of the late 90s peaks. But it would be a significant move from the current level of 84 to compress down into the range of 50 to 58. So basically, to get back to your question as to the swapping of silver for gold, what the ratio analysis argues is that no, this is not an ideal time to swap silver for gold because silver should be gaining value relative to gold over the next 2 years as this ratio compresses to this future implied target. That's what the ratio analysis is telling us. Then, Andrew, to get back to how you were really, I think, intending the question, which was to talk about the premiums on the coins themselves, because the percentage premium on those silver coins, if you think about it, one of those coins trading for $30 or $31 when spot silver is trading for under $22, I mean, that's like a 55% premium. It's incredible on those coins. Obviously, that is something to the benefit of the silver coin seller at this time. Those who would want to sell their government-issued silver coins and lock in some of that premium would be to your benefit. However, the ratio analysis suggests that this is not an ideal time to swap silver for gold. If anything, it's closer to the window to be swapping gold for silver. So when I come back to the website here of this typical dealership and we look at this coin selling for the range of $30, what I would propose to you then is that, and by the way, we can see the price here that the dealership will pay, their buyback price, $25.45. So there's over a $5 spread between the price that they will sell to you at and the price that they will buy back. So please remember that. That said, if you were to sell these coins in the private market, let's say you were to put an auction up on eBay, or you were to sell them, to someone privately, put an ad out on your local, bulletin board, or perhaps Craigslist or another service like that, you would likely be able to split the price between a dealership buyback price and the sell price. So if I was going to be advertising these to sell right now for the idea that I'm going to suggest to you, I would probably advertise them somewhere a couple dollars below what a dealership is selling them for. You won't be able to sell them for exactly the same price as a dealership because dealerships can command premiums because as a consumer, They know that there's a level of trust. If there's any problems with their orders, they know they're dealing with, let's say, a reputable company that will guarantee the order, guarantee the shipping, guarantee that the coins they receive are genuine. So if you were doing a private sale, you'd probably have to look to sell your Eagles somewhere around 27, 28 maybe, but not this price. So you split that. And if you were going to do that, back to the original question, what I would suggest is not swapping silver for gold due to that ratio compression expected, but instead swapping Eagles for silver bars. So look at this. So we just went back and let's go back one level. We said, okay, these are selling for 30 to 31 for 1 ounce of silver. When we go and look at 10-ounce silver bars, for reputable brands, which in this simple sample of their available products, I would not buy Emirates gold silver bars. This is simply a brand that I am not familiar with, and I have been doing this for a decade and a half. And so if I'm not familiar with this brand, there are likely other potential buyers who are not familiar with it. I don't think you need to go with only one brand for bars, but as far as what I see here on the main site under 10-ounce bars, I would stick with the Royal Canadian Mint bars, 10-ounce, or I would stick with any of the Swiss refinery. Pamp Swiss, Valcambi Swiss is another one that you'll see time to time. There are several of the Swiss refineries. Royal Canadian Mint, if the Perth Mint is still making bars, those are very good as well. Johnson Matthey bars are very good. Engelhard bars are very good. But I would not go with the Emirates or the Nadir refinery. I have simply never heard of these, and I suspect that others might be a little bit wary of them as well. But even with going with some of these brands right here, very well recognized brands, you can see that you get the price of silver down to 24. So you're buying the same, let's say, 10 ounces of silver instead of $31. You're buying them for $25, just under $25. So right there, you are buying a lot more silver for your dollar. I'm a fan of buying as much silver for my dollar as possible, as long as the brand or the face of it is generally recognizable worldwide. I think with these two brands, you do yourself fairly well. There are some more expensive ones. I would not go with these either, the Argentina thinking brands, a little bit too niche, getting a little bit too closer to the collectible realm. Nothing wrong with having some collectibles in your stash, but generally for bullion investors, when you're looking for exposure to as much silver as possible, you want to stick with the better known brands with the lowest premiums possible, right in that sweet spot. You can get even sweeter when you look at the kilo bars. So you start looking at this. So again, I would not go with Nadir. I would not go with Emirates, but I would go here quite competitive on price with this Swiss, Valcambi Swiss, another one of the Swiss refineries. Very good brand. And this works out to $23 and change. Upper 23s. So if you're selling Eagles, if you're able to get, let's say, 28 and then buy back at 23, you're getting a lot more silver for your dollar. I do think that makes some sense, because those premiums on the Eagles are not going to stay super high forever. Yes, they could go higher even from here. So I'm not saying to do this type of swap all at once, or even with all of your Eagles. But perhaps with a portion of them, you might look to take advantage of the fact that there still is plentiful silver out there. There's just a real tightness in the refined government stamped coin market right now. You can get even cheaper if you want to go to 100-ounce bars. And so here, again, I would not go for the absolute cheapest 100-ounce bar, which would get you down to $22.66 per ounce. I would not go for that one. I would not go for this one, but I would go for Johnson Matthey. I would go for Royal Canadian Mint. I would go, for Engelhard, but really no need to go up to 24.50 when you've got two really good options here. Very recognizable, very reputable, independent brand here, independent refinery and government-issued refinery that can get you $23.66 on the 100-ounce bar. So as far as physical metal goes, to summarize here, I'm not a fan of selling silver for gold at this point. Maybe 18 months from now, we can talk about that. But if you wanted to try to harvest some of those high silver premiums on the government-issued coins, I would do it primarily to get more silver for my dollar as far as 10 kilo or 100-ounce bars. Last possible option, if it fits with your risk profile. And it's hard to know from a simple member question, but this is where I'll tell you the type of thing that I do with investors when I sit down and have individual consultations with them. So I'll give you a hypothetical here. If you're telling me that your entire precious metals exposure, that your entire portfolio is 100 ounces of silver, you've just started. This is the first silver, this is the first precious metals that you've ever purchased. I do work with investors like that all the time. I would say to them, no, you keep your Eagles. That's a core. That's the original foundation of your portfolio. Then you start adding some other forms of silver and gold. And then you start looking at the silver miners. Why? Because when we look at the ratio of the silver miners versus their very product, where we are right now is clearly closer to a bottom in the silver mining ratio than it is to a top. And this has to do with the negative sentiment. This has to do with the fact that, silver really has just been kind of grinding here for the last 2.5 years. People have lost interest in the silver miners. And so that ratio has compressed back to levels that represented major bottoms. But if this ratio were to simply get back to where it was either in 2016 or 2011, this would need to move. The average silver miner would need to rise by 92% with zero increase in the price of silver just for this ratio to get back to a previous peak. And this is the average silver miner. This is the average large cap silver miner that exists in the Global X Silver Miners ETF. A lot of the junior silver miners would need to rise by 200, 300, 500%, again with no increase in the price of silver, just to get back to the peak that we saw in 2016, just a few years ago. So back to how I would phrase this if we were speaking, Andrew, in a consultation, what I would say is if you're that starting investor, let's say with 100 ounces of silver, selling your 100 ounces of silver to move in the silver miners is not what I would do. You need that core, you need that savings account. You can consider your physical metals, your emergency savings account, your real savings account, the savings account that come hell or high water is going to be there for you and is going to be liquid and can never go to zero, right? So you always keep that core position. But if you're like, let's say some of the clients that I work with that say to me, I've got a few $1 million in total liquid assets. I have 10,000 ounces of silver in various forms, but I have no exposure yet to any gold and silver miner. I would say to you, absolutely, I would be comfortable with you selling several thousand of those ounces of physical silver, especially if they were in the Silver Eagle category with those high premiums, and going for the relative value in this sector, which is not in the physical itself at this moment in time. It's in the silver miners, according to this ratio. So highly dependent question here. If you're talking more of a core holding that you want to do some maneuvering with, I would suggest partial sales of the high premium government coins for the lower premium bars. And if you're talking about a portion of your capital that is risk capital, I think one should consider a swap for the silver miners at this time. Okay, so I hope you enjoyed this in-depth analysis on the silver coin and bar market. If you would like to go further with us into our investments in silver, gold, and everything related, including the mining sector, the service for you is called Precious Metals Intelligence. This is where we describe the exact gold and silver miners that we are investing in here, as well as we cover Bitcoin, the US stock market, the currency markets, and the rest of the commodities. This includes the exact buy and sell signals for the investments that we are making here. They go right to your inbox by a flash update. You cannot afford to be without this service if you're just starting investing in gold, silver, or the gold and silver miners. I did mention to you there is a special second video which is about to start immediately after this video, and that will be covering the silver private placements, and we have one available right now. And remember, private placements are these investments that get you the highest amount of leverage in the sector because you receive free warrants with every investment that you make. And remember, warrants are like options contracts. They give you the ability to buy more shares in a silver mining company at a set price in the future. So imagine if the price of silver goes up to $50 per ounce or $100 per ounce, but you have the right to buy a silver mining company at the valuation that it is today when silver is only $21 per ounce. And imagine if that right is given to you for free. Yes, absolutely for free. The other thing given to you for free is a subscription to Precious Metals Intelligence if you are going to join us in the private placement service. One way or another, that second video is coming to you now. If you're at all interested or if you would like to reach the stage in your investment career where you can invest in private placements with us, we have hundreds of investors from around the world that are doing this. And if you'd like to get to that point, I think you'll learn a lot about silver private placements by watching the very next video here for free on YouTube. Last but not least, remember, if you want to speak to me one-on-one about your unique situation, whether you're just beginning, literally, whether this is the first time that you've ever thought about buying gold and silver and you just don't want to get taken advantage of, remember, I do not take any fees, compensation, or kickbacks whatsoever from any of the mining companies, any of the bullion dealerships, any of the conferences that I attend and speak at. I work entirely for the benefit of individuals. We sit down just like we're doing right now, and we talk about your unique situation with respect to your investments in the precious metals and beyond. So know that you can reach me on the consultations tab. One way or another, think about what we talked about today. This might be a very interesting time to move some of that money in silver down to the forms of silver where you can buy more ounces. In my opinion, you want to be buying the most ounces for your money as possible. I think that is the name of the game right now when silver is so cheap. Stick around for the next video covering silver private placements, and I will see you right there.